When Jerome Powell assumed office as Federal Reserve Chair in February 2018, one of his first actions was to raise interest rates on the back of the US economy increasing strength. Donald Trump didn't take long to express regrets about nominating him. The tense relationship carried on throughout Trump's first tenure and quickly reappeared as he returned to the Oval Office, raising questions about Powell's possible removal and, more importantly, concerns on the independence of the Federal Reserve. Joining me today, Director of Global Market Strategy, Vincent Deluard. Thank you for joining us, Vincent.
Pleasure to be here.
So first of all, why is central bank independence considered so important?
Well, I mean, it has been a cornerstone of, how we've done monetary policy for 40, 50 years. I would argue that it's a fairly new idea. I mean, until we had the Fed Treasury Accord in the 1950s, in most countries, the role of the central bank was mostly to finance the government. And yeah, that idea of an independent central bank really came after the 1970s, the Great Inflation, when it was perceived that having an independent central bank would prevent excessive inflation and deficit financing. But for what it's worth, I've always felt that this was a bit of a charade. At the end of the day, the role of the central bank is and has always been to finance the government, and that's something you can see every time there's a crisis. At the end of the day, the central bank does what needs to be done, and I think we're going back to this kind of more traditional way of doing policy.
So that's exactly what we saw in the early 70s in the US when Richard Nixon pressurized Fed Chairman Arthur Burns, right?
Exactly. And I mean, the big difference with the 70s, I guess, is that in the 70s, so we had this conflict between fiscal and monetary, but at the end, monetary resisted and eventually won when we had Volcker basically letting go of the money supply, targeting the money supply and letting go of the interest rates, pushing the Fed funds rate close to 20% and long-term rates up to 16% in order to break the back of inflation, and eventually forcing the fiscal authority to back down. And it seems to be like it's the 70s, but in reverse. We are seeing the same conflict, but a different outcome here.
So in 1977, that was the pivotal year for central bank independence with the passing of the Federal Reserve Reform Act.
Yeah.
And I guess other banks followed suit as well. That's something that we've seen spread globally. Chile, South Korea, also in the 1990s, and then in 1997, the Bank of England. And yet, after all these examples, the Federal Reserve could now be under the threat of losing some of its independence.
Yeah, I mean, this is an assault that, as you pointed out, I mean, Trump's always been quite critical of central bankers. And remember, he's a real estate developer at heart. I mean, I have never met anyone working in real estate who likes higher rates, but there's always a reason to cut rates. And that's still kind of how he approaches the matter. And listen, we can all, roll our eyes and say how terrible that is, and it probably is. But politically, it's probably a savvy move. I mean, Trump has, on the face of it, a pretty strong case. I mean, going back to that conflict in 2018, for example, when Powell was hiking, Trump was obviously complaining about it. Eventually, I mean, Powell caved in December of 2018 and had this famous Christmas pivot, and it was fine. So Trump can be like, listen, we already had this fight, and I was right and you were wrong. Then we had the great inflation during COVID and the transitory fiasco. And then finally, I think the nail in the coffin was the 50 basis point cut last September, just before the election, which Trump perceived to be politicized. So the Fed is not in a very strong position. It's generally not an institution that the public understands very well or even likes. So it's good politics for Trump to go after them. And then we can certainly see from the market's reaction that it's it hasn't been the bloodbath that one could have expected. If we had been told, a couple years back that the president would, do seem act like an emerging market Gaudio in some way, uh, I would not expect the market to be flat on the day, gold to be modestly up, and yields to barely move.
Very good point. Well, thank you very much for your analysis once again. For more videos like this, please do like and subscribe.